CGGR recovered faster and fell less hard. That's the recovery advantage most investors completely miss when choosing funds. CGGR bounced back 26 days faster than VONG. That's nearly a month less of watching your portfolio bleed red. Over 5 years, VONG crushed CGGR, 99% versus 84%. That 15-point gap tells you something important. Nearly identical performance here, VONG's 97%, just barely edges out CGGR's 96% over 3 years. VONG's leading by 15 percentage points over 5 years, but zoom into 3 years and they're basically tied. Shows how time frames completely change the race. Over the past year, these two have basically delivered identical performance. CGGR, just barely edging out VONG by 1%. Both funds deliver identical 0.6 Sharpe ratios. They're equally efficient at converting volatility into returns over 5 years. Identical downside protection here. Both funds matched at 1.5, so you're getting the same crash cushion either way. Identical report cards here. Both funds score 0.6 for overall risk management and 1.5 for downside protection. They're managing risk exactly the same way. CGGR's 4 percentage point cushion means real money stays in your pocket when markets crash hard. VONG's 0.07% fee versus CGGR's 0.39%. That's nearly 6 times more you're paying every single year. That extra $32 a year might not sound like much, but compounded over decades, it's real money lost. Think of expenses as couch change slipping away. VONG loses just 7 pennies per $100, while CGGR drops 39. That adds up over time. VONG's betting heavily on tech at 50%, 17 points more concentrated than CGGR's 33% allocation. And the VONG's barely international at 0.28%, while CGGR spreads 8% globally. That's 30 times more geographic diversification here. Nearly identical volatility here. VONG at 21%, CGGR just 1 point higher at 22%. They ride similar waves. VONG wins on returns with 99% versus 84%, matches CGGR's risk profile perfectly, yet costs nearly 6 times less at just 0.07%. Think of these two as roller coasters with almost identical intensity. VONG's 21% swings versus CGGR's 22% swings mean you're in for nearly the same wild ride. VONG's delivering nearly 5 times more dividend income, 0.47% beats CGGR's measly 0.1% yield. VONG gives you 47 cents per $100 invested. CGGR, just 10 cents. Tiny pizza slices since neither fund's really about income anyway. So VONG dominates with nearly double the assets, $38.8 billion versus CGGR's $19.9 billion in managed funds. VONG's 50% tech weighting delivered 99% returns, beating CGGR's 84%. But concentration means higher risk when tech stumbles. CGGR's 8% international stake gives you 30 times more global cushion than VONG's near zero exposure offers. So, which fund wins? VONG. If you're aggressive on tech, CGGR if you want safer diversification. Think of it like choosing your marathon pace. VONG sprints faster with 99% returns, but risks 33% crashes, while CGGR jogs steadier at 84%. Standard disclaimer here. Do your own research, consult professionals, and invest at your own risk. Want more battles like this? Hit subscribe for weekly breakdowns that actually make sense of the data.